Many investors are pondering whether this is the right time to buy the dip since the value of cryptocurrencies has dropped dramatically in recent months, from record highs to mind-boggling lows. As part of a larger crypto market crisis, which also saw the value of Ethereum and Cardano fall, the price of Bitcoin, which previously traded for about $69,000 per coin, plunged sharply in May below the psychological floor of $20,000. In only 1 week in June, Bitcoin fell by 30%, and by the middle of July, it was still trading at about $20,000. Now everyone is wondering whether the crypto world has already reached the bottom, or is the situation going to be worse in the future? Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. In today's video, we are going to talk about the investor Chamath Palihapitiya and his predictions about what we should expect with regards to the crypto market. He said that the market will go up after it has bottomed. This will be a very educational video, so let's now proceed as we have a lot to discuss. If you do not know Chamath Palihapitiya, he is the CEO of Social Capital, one of the top venture capital companies in the world. He is one of the most well-known billionaires of this generation because of his profession, and he has some fascinating opinions on cryptocurrency. He had already considered the possibility of Bitcoin's decline. He now has fresh knowledge to impart about the cryptocurrency industry. Of course, it would be better if you hear this useful knowledge from the man himself. Hence, let's watch his clips.
Just throw up the big tech chart because I think you guys should see this because I think this is very important for Silicon Valley. I mean, what's incredible on this chart is that, when everybody talks about being long the S&P 500, it was always really a proxy for being long Amazon, Facebook, Google, Microsoft, and Apple. And at the peak, in May of this year, it was still 25 cents of every single dollar of the S&P 500 were these 5 companies. And, we always said the market bottom will be when the generals, quote unquote, get shot, to borrow a phrase from Gavin Baker. And it looks like the generals have been shot. Yeah. And what's incredible is this week, every single one of those companies, other than Apple really, reported pretty crappy earnings. They got totally taken to the woodshed. The percentage of these companies as a percentage of the S&P is now, off by 500 basis points. It's down to 20%. Yet the markets are ripping higher today. So I think it's kind of what we talked about 3 weeks ago. Like the bottom is kind of in for the short term, so it's really exciting actually to see. I think this is the point where you have to now start to get pretty constructive about where things are going. Because if this stuff could not bring the market down, it's hard to see something other than an exogenous event, probably some Russia-Ukraine event, really having a negative impact. So to me, I'm kind of like, I don't know, it seems like pretty bullish.
Due to the fact that their most recent earning reports were all very disappointing, these FANG stocks fell considerably in the most recent quarter. They even have low estimates for 2023. Their market is no longer in a bull run. The worst is definitely behind us, according to Chamath, unless we witness some type of black swan-like catastrophe, most likely involving the conflict in Ukraine. Nothing will make the market worse off. Of course, it does not necessarily guarantee that the market will suddenly turn bullish. But he asserts that nothing worse has yet to occur. The things that frighten people are now in the past. Now that we have heard his thoughts and arguments, I have some questions to ask. Do you think that the market has already bottomed? Or do you think it is still too early to make an assumption about it? Let us know what you think by sharing your thoughts in the comment section below. Also, please subscribe to our channel so you'll be a part of our growing community. We really appreciate it. Now, there are also other factors that can affect and events that can affect the market. Is there any other major incident that might now have an impact on the market? Let us discuss the Fed meeting and the outcomes we can anticipate from it. Just to be clear, while Chamath believes that we have bottomed out for the time being, that does not rule out the possibility of a lower low in 2023. He also states unequivocally that the Federal Reserve's recent aggressiveness is to blame for this. He also believes that those impacts haven't yet materialized. The results will take time to appear. The first signs of this aggression won't appear until 2023. In the final video, David Sachs discusses the Fed before Chamath offers his opinion. Therefore, if you own cryptocurrency, This market may eventually come to life. Since Bitcoin has been essentially flat all year, we might see a rally. But once more, the Federal Reserve is the key. Despite slowing the speed and pace of interest rate increases, the Fed announced in a statement that more significant rate increases are on the way. The massive increase results in a new target range for the central bank's benchmark lending rate of 3.75% to 4%. The Fed funds rate hasn't been so high since January 2008. Additionally, there's a danger that it could start a recession. Following the meeting, Fed Chairman Jerome Powell recognized that there was still a chance for a soft landing, which would involve slowing the economy without going into a recession. The overall rate of inflation is not actually declining. Despite the aggressive rate hikes, core inflation is really still rising. Simply by looking at the headline inflation rate for the United States, we can see that it peaked at 9.1% in the middle of the year. Just focusing on the previous two, August to September, 8.3%. The Fed wants to see a far more dramatic result, which they haven't seen yet, is the only time they bring it up after that. After that, the core inflation rate, which reached a year high last month, was much worse. We continue to observe that the Fed believes they must maintain their combative posture due to the unemployment, GDP, and the rest of the economy. They frequently discuss how the economy can withstand rate increases at their meetings, since it is so robust that US GDP data accelerated to the positive last year, adding a 2.6% pace increase. Since the economy was contracting prior to this, we did observe 2 straight quarters of negative GDP. The most recent data should boost the Fed's confidence in their ability to maintain their strong monetary policy, as should the persistently low employment rate in the United States, which demonstrates the health of the labor market. Now, this would all affect the crypto market in different ways. Of course, we can expect that the market will react to the new policies of the Fed. The crypto market is set to act accordingly to these monetary policies. Until then, we will always watch and report to you the recent developments and news about the crypto world. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you will be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.